We're going to do a brief video on AAPL, Apple stock. We're looking at a daily chart for Apple, and we've got three moving averages on there. The green is 5-day, the red is 20-day, and the blue is 200-day moving averages. Let's take a look real quick and see what's going on with Apple. We see back here in May of 21, we got a bounce off of the 200-day moving average. Didn't have a significant series of closes through it, and so it resumed its bull market. You can see it had a tremendous amount of respect for the 20-day moving average, and you got a great rally from about 125 up to 148. You had your distribution, your sideways market, where moving averages are not real helpful, but you'll notice we're still well above the 200-day moving average. We had, again, this little sell-off. Whenever you have these huge gaps between the price and a 200-day moving average, you can usually expect them to be filled. You see this one was filled here. This one was filled. Once it was filled and approached the moving average, didn't really even get that close, you resumed back up. So this is just an overbought indicator, this large space above a 200-day moving average. You can expect a sell-off. That's what we got. And we had reasonably good respect from here. I would say excellent respect of the 200-day moving average, absent this little blip here. And we made our highs up here at around 182 in January of 2022, first of the year. At that point, we had huge distribution. You can see we went from the 180s all the way down here, challenging the 200-day moving average down to 150. So we had a $30 sell-off here, and again, a tremendous rally, just almost virtually straight up, not parabolic, but close to it, all the way back up to 180 again. And at that point, you could reasonably assume this bull market was over because we did not challenge the new high. We got close, but not anywhere near violating it. And then we got these sell-offs. Now, you can take a good look here. Once we had a 5-day close below the 20-day moving average, and both those are headed down, you're seeing tremendous distribution here. You can see the volatility has increased dramatically as it approached the 20-day moving, the 200-day moving average. You had some tremendously volatile days in terms of the volatility you saw going up relative to the volatility you saw going up. And this was all distribution as people are getting out of their positions. They realized the stocks probably had it. And then, of course, it showed a series of solid closes and began its bear market down below the 200-day moving average, again respecting the 20-day all the way down here until about 132. So that's a $50 sell-off, which is a significant amount of sell-off for any stock, and especially one like Apple. We had, again, this little blow-off decline to the bottom with the gaps that we see here, and it put in its bear market bottom down here at about 129 on June, it looks like June 16th. So what we're in now is just a solid buy rally that's really kind of just almost mindless. As you can see, respecting the 20-day moving average, never hesitated as it gapped through the 200-day moving average, and even essentially straightening out a 5-day moving average, which is no small feat. You can see how crooked this was coming down in some places. But when it's really seriously buying this Apple stock, you can see these 5-day moving averages straighten out. And this was not completely straight, but that's for a 5-day moving average, that's very straight. So this was just kind of almost, I hate to say mindless, but this was just tremendous buying of a solid company like Apple, as people just bought into the fact that it was going to rally, and so it did. We now have gotten to the point where it's got to put up or reverse, and as you can see, we have our top here at roughly 182, a lower top here at roughly 179, and a potential top here at 176. So the next 2 weeks, week and a half, 2 weeks, are going to determine what happens. My best guess is you're going to get a breakdown here to the 160, low 160 range as we test the 200-day moving average from the top side and see if this rally is going to hold up. It's entirely possible that we get some oscillation back and forth here using 158 or so as a mid-range, and price oscillating between 175 and 145-ish, 150-ish. It's entirely possible we'll move into some kind of sideways distribution. Right this second, it's really hard to say. My best guess, and this is a guess for entertainment purposes only, is you're going to see a sell-off in Apple stock here shortly, down to about the 163 level-ish or so, probably by the middle of September. That would be my best guess, and that's kind of conservative. I don't see this stock rallying significantly higher, but you never can tell. There's a lot of interest rate issues going on in this stock. There's a lot of very sophisticated buyers in this stock. And this rally that you see here is just a tremendous, just pure buy bull market rally. That's kind of interesting to see after what is a significant decline, but I wouldn't say a gut-wrenching decline, unless, of course, you owned it at 180. This decline is not severe for a stock that had such a great rally, and this is kind of unusual, I would think, to essentially rally this fast and this hard. So my guess is you're going to drop back and test the 150 to 160 range right in here sometime in about the middle of September. That's my best guess looking at this. Let's take a look and see what RBAM research says about it. We follow Apple. These are algorithmically generated prices, and these come out every morning by 7 a.m. We have 1 day, 5 day, and 20 day hold periods for stocks. And this is for the 22nd. I'm recording this on the 21st. Apple's here. Shows a buy price 170, 5 day hold 170 60 cents, and a 20 day hold 171.21. Basically, that means if your research indicates this is a good thing to do, you could buy at a similar price and hold 1 day in and out. You buy today or buy tomorrow, the Monday, and cover the end of trading Tuesday at a loss, or sooner if you got a profit. And the same thing with the rest of these. Buy tomorrow, close 5 trading days at a loss, or worst case, or take your profits sooner. And then the 20 day is the same way. Either buy tomorrow, the 22nd at 171.21, or wherever you think you should buy based on your own research, and close worst case at a loss 20 days out, 20 trading days out, or take your profits as soon as you get them. So that's basically how these algorithms work. They're for entertainment purposes only, and you should never use them for anything other than entertainment. You have to do your own research. But we do cover Apple every day. You're not always going to get prices here. Sometimes they'll be empty like Tesla is for tomorrow. But this is indicating you may be able to make some money, or at least get some entertainment at these prices for these hold periods for tomorrow, August 22nd. If you're interested in those, you can get them absolutely free every morning before 7 a.m. No credit card required at rbamresearch.com. We cover 190 stocks. We cover the major forex pairs. We cover BTC crypto, and we cover the major futures contracts. Again, rbamresearch.com. There's a link in the description below. All you have to do is click and register to get them. They're updated every weekday by 7 a.m. If you like this video, please click the like button. If you want to subscribe, please do that. If you have some comments on making this video better or future videos better, please leave them in the comment section. Keep in mind, everything you've heard and seen is for entertainment purposes only. It's all opinion, and you definitely do trade at your own risk, and that includes all the entry prices.